Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. This is your weekly video for Sunday, January 29th. Well, I think it's an important time to take a look back over the last 3 weeks because looking back on my old videos, back on the 8th of January, I drew this green box here for you and recorded it, and that's all there on that video that dropped 3 weeks ago. So really got to say that this turned out to be overall, and I would say an A- forecast, considering we moved up right into the heart of this green box over the last 3 weeks. Yes, it did take a different path some days than I thought it would. But overall, looking back, the accuracy of the last 3 weeks has been directionally correct and correct in the magnitude as well. So the question is, did we all make money from this? Did I make the money I thought I would from this? And answering for myself, I know I did not. So I was thinking a lot about how to improve my execution and turn these accurate forecasts into greater returns. And I realized that what's missing is I think I had the wrong mental model. So let's go back and take a look at our mental model here. At its core, this mental model is pretty solid. Anticipate, confirm, and execute. The anticipation part is working out really well. Okay, we've just seen that over the last 3 weeks. Prices moved up in the direction and in the magnitude we thought it would. Where I personally need to improve is the confirmation and the execution part, because what I'm finding is that my stops are too close to price. I'm letting myself get faked out by price, and that's why there's a picture of Barry Sanders there. He is, if you're not familiar, he was an amazing Hall of Fame NFL running back who would easily break defenders' ankles with his dekes and moves. And that's kind of how I feel sometimes as a defender trying to tackle Barry Sanders. Yeah, it's not going to happen. And I think part of the reason is I'm trading price. I should be trading structure. Structure-based confirmation is the most important thing and most important learning that I've gained over the last 3 weeks is that even with an accurate forecast, good anticipation function, if your confirmation is too close to price, you're gonna get taken out. So the theme of today's video is structure. How do we define structure? How do we use it to our advantage? So this is a little bit of a change going forward. So consider it a bit experimental. I sort of had this idea on Wednesday. So don't, if you like to follow me along in this structure-based experiment, by all means, please do, but understand it's an experiment. It's early. And I thought, should I share this on the video? Should I not? And I figured, why not, right? Let's get it out there. Let's get some feedback. Let's get some thoughts and comments from the community about using structure-based confirmation. So let's dive into it. What do I mean by this? It ties back to really the GAN fans. And what I love about GAN fans and why I'm adopting them so heavily is that they reflect the longer term price trend, and they reflect that down into lower time frames. So here we are on a daily chart. The thick blue is the 1x1 line. I've got some videos that define how to draw these, and why would anyone put a 1x1 line here, and what is a 1x1 line after all. I'll drop the links to those videos in the chat so you can go review. But in general, price above a 1x1 line is in a strong position, below is in a weak position. And there's also these other lines here, 1x2, 1x3, 4, and 8. and those are basically harmonics of the 1 by 1, right? So the GAN-FAN to me defines the structure of the price, and price, as you can see, has been following up the minimum, the 1 by 2 up here, and between the 1 by 2 and the 1 by 4, that kind of defines the structure so far. So if we zoom in a little bit to like the last couple days of this week was really interesting. So we're going to zoom into a 30-minute view, and we're going to take a look at this last move up here. And let's actually do this on the Qs and not on NQ. So if we do this on the Q, zoom in on the last 30 minutes. So again, we've got our GAN-FANs here, and I've planted a GAN-FAN on Wednesday's open, Wednesday's low, which was the Microsoft guidance low. And that was really like a huge buying opportunity. I didn't recognize it at the time because I wasn't really focusing in on structure. I was focusing in on price, okay? But you can see that that low was right on a 1 by 1 here. And if we zoom out, we can see where that was anchored. And that was anchored all the way over here on the December 28 low when everyone was max bearish. So if we zoom back in here, we can see that price wicked below that 1 by 1 and held, and then basically went straight up for the rest of the week. So using a structure-based approach as opposed to like a price-based approach where the focus would be on this big gap and oh my goodness and trigger stops and all this stuff, realizing that price is right on top of a key 1 by 1 GAN-FAN angle, and that in order to confirm a break of this, we really need a separation below. Just a wick below isn't enough. Okay, so that kind of approach would have allowed me to profit better from this accurate forecast that I made. But there's still some super important learnings here, and I'm sharing those with you. So the other thing I want to point out here is we've got the 1 by 8 going up, okay, and we've got a 1 by 4. But price kind of goes up sort of like halfway in between there. So if you want to draw like a 1 by 6, you'll notice that you can't do it using TradingView, but you can manually do it pretty easily. All you have to do is just drop like a little fib retracement tool here, turn on only the 50%, right? Put another one here, turn on only the 50%. And then connect that up with a trend line. So here's a trend line that extends from the start of the GAN-FAN up to that 50% line, up to that 50% line. And you can see how price just crawled straight up that green line. Like there was, anytime it touched or tagged that line, that was a huge buying opportunity. So again, this is reinforcing the fact that, hey, this GAN-FAN defined structure that we've got on our chart is a great way to trade, right? And this is much more, I think, reliable than, say, connecting any two random points with a trend line, because it's tied back. The angle of these lines are all tied back to the 1 by 1 that's drawn on a long-term daily chart, right? So this is a harmonic of that. All right, so going forward, I'm going to be using structure a lot more to place my stops, and that should help keep me in trades as long as the structure holds, right? So down here we had a structure hold because it tagged the thick 1 by 1. And then after that, we created a new structure, and that structure held right up until the last 30 minutes of the day, okay? And then this is where we got our first real structure break, okay? So is that enough to be bearish? No. but it's an indication of a potential major structure change, though. So that's something that we're going to be watching very closely going forward. Okay. So let's build a new forecast here for the rest of the week. Okay. Now we're back on the NQ Futures, and we've got our 30-minute chart here. Let's kind of zoom out a little bit to a daily chart. All right, so this is the yellow line that we had there before. This is our successful forecast. This 1/3 is kind of defining the structure that price is crawling up, right? And we're going to be using this 1/3 as our structure break line, right? So if we get a close and separation below that, then we know that this structure is broken and we're creating a new structure. Price may be dropping down to the next scan fan, or it may be doing something larger than that. We don't know. But as long as price is above this 1/3, we should stay bullish. Now, we have our forecast and the logic that we have established over the last few weeks, and we're watching this blue cheat code line very closely. That is on Sunday night. And as I've explained on many videos, cheat code blue tends to align with major pivots. We see that February 9th. We saw that, back last year around the August high. So this is a time where we should be looking out for a structure break. So we should be taking profits off the table if you have them, and raising cash in anticipation of a structure break. The other thing we see here is the other blue line is Mercury-Venus separation. That is also making a top here around February 6th, February 7th, before it starts turning down, right? And that also aligns with major pivots. So we've got two leading indicators of major pivots happening in the next week or so. Okay. So that being said, we got to be very, very careful. There's a lot of momentum behind price right now, and there's certainly a lot of bullish sentiment. So it's a good time to raise cash, take profits. Personally, I am not going to be going all in short until I see some indication of a structure break. I've entered some anticipatory shorts at the moment, but that is I'm not going to be adding to those until we get a clear structure break. So that is not financial advice. That's just how I'm taking advantage of this new structure information and positioning for what I think will be a move down into March. And that's also what the time trades probabilities are telling us. Okay, so that is that. Let's go to TradingView. One of the other things I want to share with you is an observation around breadth. Now, we've got the McClellan oscillator here, and this is a pretty widely used breadth indicator. You can see how we hit peak McClellan oscillator back on Friday, January 13th. Fridays always seem to be very bullish. The last 3 Fridays have been super green. So this was Friday the 13th. We got peak McClellan oscillator. Now, the thing we need to be careful of is notice that peak McClellan oscillator has occurred a few days before we get peak in price. Over here, we had peak McClellan oscillator on Friday, August 12th, but we got peak in price on Tuesday, August 16th. And the McClellan oscillator had already started declining. So right now we're seeing a pretty huge divergence between price and the oscillator. So that's something to be aware of. Okay, so let's go and build a new forecast here. We can go and take a look at the NQ Futures because that's what we use. Looking at what's coming up this week, huge news-filled week. We've got the FOMC announcement. We've got FOMC press conference. We've got major companies dropping earnings. So let's go and take a look at the highlights here in terms of news. And we can see here that we've got a lot of news happening this week. I'm just going to zoom in a little bit so it's a little bit more legible. This yellow line is our last forecast that we did from last week. This is kind of the outline of what we're seeing here. This is the current structure that we're in. Price pushed up above this magic level here, this orange line. Price pushed above it. Interesting that it closed right on it. And we're currently in this price structure here between the two green lines, right? This is the Microsoft dip where we dipped down and then recovered so strongly to end the week. All right, so looking ahead, we've got cheat code teal on Sunday night. We've got Gann wave yellow on Thursday. Both of these are lunar. Both of these are topping indicators. We also have lunar phase happening. We've got a full moon happening this week. So a lot of topping indications from the moon. And this is going to put the moon in divergence with Mercury. Last week, I think it was so strong, I believe, because both the moon and Mercury were pulling in the same direction. We're going to lose that synergy this week as the moon hits these negative, these peaks in its cycles, in its natural cycles. Does that mean we go down this week? Maybe. We could, but often topping is a bit of a process, so we could see some volatility coming up, and certainly sentiment is very high. It's in the momentum is very high as well. So I'm going to share the new forecast path here. I think we're going to get a gap up open because of the cheat code teal on Sunday night. That's typically what happens. And I think there's going to be a lot of FOMO in the market as investors kind of rush to buy. I think there's going to be a bit of pre-FOMC nervousness and selling that happens after that. And then I think ultimately FOMC and the non-farm payrolls numbers and unemployment claims could push things up into this Gann wave yellow that's happening Thursday night. And then finally, I think we'll start to see the decline that we're anticipating in the first week of February. Now, this is all just a forecast. This is just the A in anticipation. All right. So if we see some sort of break of this price structure, that will be confirmation of a turn, right? So we've got the anticipation, we've got our price structure, we know what we're looking for confirmation. So this should be a good setup for us to get positioned for what I think will be a trip down through March. Okay, so that's our new forecast. Let's do a quick tour of what we're seeing in some of the other major indexes. We've already looked at, so this is SPX. What we can in time trades, the timetrades.com web application, so we can look at the Qs. The Qs showing a probability for a top here, February 1, February 2, and a big cluster of pivot lows here in late March and early February. So again, topping is typically a process. We could see this could be the ultimate top here, or we could see an ultimate top over here later in February. Again, Mercury is continuing to accelerate, so that is going to provide some support here. I don't think we'll see, you know, a real quick move down or violent moves down until Mercury really starts to slow in late March. All right. One of the things I've been keeping an eye on is natural gas, and this ties back to the structure theme that I'm talking about. So if we go and take a look at NG, here it is. So this is one of the ways that structure can help. And there is no break of structure here. Like natural gas futures is just grinding down in this between this 1x1 and this 1x2 with a few little, you know, pokes above, but it never really got any traction getting above there. And once it fell down back underneath this 1x1, it's just been going straight down. So this is in a way a missed opportunity. Definitely could have made a lot of money using the coal DTF here. But at the same time, it's also a great confirmation that we should be standing aside on any longs and waiting for this structure to break before we attempt any longs in natural gas. So this is a good example of using GANFANs as price structure to keep us out of a trade when you know, waiting is the right thing to do. Okay, the other big news in the past week was on the NIFTY, and we can take a look here in time trades. Obviously, the Adani short seller research was a catalyst for a huge sell-off. And you know, I did not know that was going to happen last week when I mentioned that the NIFTY was not a buy. But let's take a look at NSEI here in time trades, and the forecast shows some peak down days. But I mentioned in last week's video that we shouldn't really be attempting any longs until after this cluster of pivot lows in late February. And sure enough, we got a big slam down on that Adani news last week. And we've got this continued cluster of red probabilities down until late February. So let's just let that news play out. If you're an investor in the NIFTY, let it play out. You may want to attempt some shorts here, targeting this pivot low in late February, and then look for some long opportunities and take advantage of, you know, the GANFANs to establish the price structure framework and trade against that. All right, so I think that's about it for the NIFTY. Let's go and take one last look at Bitcoin and crypto here. Again, Bitcoin is in a very strong position here above the 1x1. Price structure is bullish. It's as it got close to this halfway point. So again, this green line here is halfway between the 1x2 and the 1x1, and I drew this manually here, and you can see how when price got close to that halfway point, boom, it found support and took off. So again, confirmed bullish price structure on crypto as we head up into this GAN wave yellow here on Thursday. And the forecast for crypto continues to look pretty good. Let's bring up Bitcoin here. We've got a nice cluster of green in the forecast, and that's increasing probabilities as we head into the GAN wave yellow on February 2nd. So in general, bullish bias across the board, except for the NIFTY, and taking and we're also have an eye out for a potential structure change this week in North American stocks. So that's the video for this week. Thanks again for using time trades. Good luck trading this week. Trade safe, and we'll talk to you again next week. Bye now.